Ladies and gentlemen, welcome back. This is Christopher Aaron. It is March 17th, 2021, and I want to welcome you to this broadcast. What it is going to be is a silver and gold price update. As you know, there are some times where we need to focus on one metal more than the other. This is a time where there are things happening in both that I want to let you know about. So let's get right into it. Make sure you hit the big red subscribe button so that you'll stay updated when these free videos come out. And while you're there on that part of the website, make sure you hit the bell icon. That's what actually lets you know when the videos are uploaded, okay? So do both of those, and let's look at silver and gold. By the way, if you are a premium subscriber, please check your email. There was a special notice just sent out a couple of hours ago about a private placement opportunity in a gold and silver mining company. This is one that I'm very excited about. If you don't know what I'm talking about here with private placements, this is something that we will cover in more in depth in the future. I'll kind of go over all of what that means, what the pros, what the cons are to that sort of investment vehicle. But for now, if you're interested in that, make sure to subscribe to the premium service and you can still participate with us in that. So there was a Federal Reserve meeting today. This was the big piece of news as far as what impacted gold and silver. There was the Fed meeting today. Here is the chairman, Jerome Powell. And, I watched the entire thing as I usually do, and I try to take some notes, and then I watched the follow-up press conference as well. And so I just want to share with you what stuck out to me. Here are some quotes that I jotted down as Mr. Powell was speaking, and I just want to cover what this really means here from the big picture perspective. So one of the things that he started to say toward the beginning of his talk was that inflation remains below our 2% goal. And just remember, it's only going back to 2013 that the Fed even began to have this quote-unquote 2% inflation goal. For the entire history of the Fed until 2013, they did not even have this. They said that their goals were stable prices. Now, they have a 2% increasing prices goal every year, apparently. So just remember, because sometimes people have a bit short memories with all this Fed speak kind of stuff, but this has not been around for a while. So then he continued and said, we could see upward pressure on prices if spending picks up, okay? And if there are supply bottlenecks, yes, of course. But that these one-time increases in prices should have only a transient impact on long-term inflation, okay? Furthermore, inflation has been persistently below the 2% goal for some time. So we will look to now have it above 2% so that it averages 2% over time. Furthermore, he's going to continue with the 0% interest rates for some time. They are not even thinking about raising rates yet, although the market will have its own opinion on that over the next 6 to 12 months as to when the market expects them to begin raising interest rates. So the big thing here is that if you boil all this Fed speak down into just one or two major points, it's that the Fed is trying to convince people that any increase in prices, any increase in inflation is only going to be temporary. And that furthermore, because it's only going to be temporary, we can actually have inflation above 2% for a while to sort of average out the inflation over the long run. So basically, he's got the target on the back of everyday savers. He's aiming the bazooka at your back with the inflation bazooka and saying, "Get ready, I'm coming for you." And they're doing a lot of this talk, a lot of this speak to kind of try to convince the average person that, don't worry about the fact that, for example, the UN World Food Index is up about 20% here over the last 6 months. Don't worry about that because this increase in inflation is transient. Okay, so, he can try. He can try to fool as many people as he wants. I know most people are pretty aware that the prices of their food and everyday necessities are rising by a lot more than 2% year over year, but he's going to try his best to convince people of that. Now, it's another thing to try to convince the market. And here we get into, okay, the sum of the gold market had this to say about the Fed speech. I mean, look at that move today in gold, right? Pretty significant. Up about $20, and we're looking strong in the overnight session in Asia. Let's switch over and look at silver. A bit more muted in silver, but clearing the range from the last several days, clear to see on the daily closing basis. We will get to silver in just a moment, but silver has some stiff overhead resistance coming in right here in the upper $26 region, which is accounting for this short-term peak that we saw here. So we'll watch silver in the overnight hours, and then we'll talk about this from a technical basis. But, what I want to do is not only look at the precious metals here, but let's look at the sum of the major world asset classes. So take a look at this. Now, this is really something. I mean, so first of all, let's mark where the Fed meeting was today, 2 p.m., boom, right there. Is anyone in the mainstream press talking about that after the Fed basically came on TV in this Zoom meeting that they did today, the virtual conference, that after that meeting, the best performing asset classes in the world were what? Precious metals. Okay, so there has been a lot of fear in the markets over the last few weeks. There's been fear that, this inflation that is starting to be felt in the system is going to continue causing a sell-off in the bond market, which we did see today, by the way. Bonds lower by 0.75 of a percentage point. These are long-term U.S. bonds. But notice, finally, we were talking about this 2 weeks ago, finally gold did not sell off with the bond market today. You did not see gold investors dumping their gold just because interest rates are increasing since bond prices are falling. So we're starting to see this divergence here, and then if you look at the how these sub-asset classes came out, and we look at gold finishing up almost 0.75 of a percentage point higher, and silver up by 1.33%. So this is starting to be more like the stereotypical relationship that we should see silver outperforming gold. And then we look at the gold miners outperforming both physical metals, and especially physical gold. And then we look at the silver miners outperforming not only the physical metals, but the gold miners themselves. You start to say, okay, wow, we're starting to see more of the stereotypical relationship here that should exist in a rising precious metals market, where silver outperforms gold, the miners outperform both metals, and the silver miners outperform the gold metals. We're starting, this was a strong day today. There's nothing guaranteeing that this is the beginning of the permanent move as far as these themes go. And in fact, we're following very closely several signals in the gold market in the premium subscription that are going to give us a very valid signal as to whether or not there could be one more significant decline in gold still to come. Let's say more of that irrational selling comes as bond prices continue to decline and people just dump their gold for no good reason. We're watching all of these things, but I do have to say this was a very constructive type of day, especially to see this at the end of the Fed meeting, and then especially to see the monetary assets outperforming the industrial assets, and all real assets outperforming fiat assets. We're kind of back to that stereotypical precious metals leading the way in a stagflationary environment, which is what I strongly suspect we are heading toward over the next 5 to 10 years. So good to see over the short run. I want to address what we were talking about 2 weeks ago, which was this irrational sell-off in gold amidst falling bond prices or higher interest rates. And I want to just show you the intermediate term view here because this is the key to the entire investment thesis, if you ask me, in precious metals is when does the market begin to segregate real assets, tangible assets, from fiat assets? And, so this idea that gold and bonds only move in the same direction, in other words, gold moves inversely from interest rates, it's clearly false. I mean, we saw this major surge in gold back last summer, no corresponding surge in the bond market. In other words, no drop in interest rates that happened this summer. So gold can move higher without interest rates moving lower. And it looks like we are starting to see the beginning, perhaps. I mean, now this is only about a week and a half worth of data here since, the very beginning of March. But if you notice how gold is up here by several percentage points over the last week and a half, while the bond market continues to sell off, it's like, so are we about to see the big picture divergence here between these asset classes? It's going to happen eventually. There's no guaranteeing that it's going to happen this day or next day, on an ongoing basis. But this is going to happen eventually. Remember, the largest bull market in precious metals of all time in the 1970s happened as what? Bond prices were falling and gold was rising. Strongest bull market that's ever been seen. So there's this myth that is commonplace here in the markets these days, that as bonds fall, gold needs to fall with it. Not true, won't be true. We're seeing the prelude to that now. Let's talk about silver for a minute, just from a technical basis. Where are we? Let's bring up the key. Now, I know there are a lot of lines here to look at. Keep in mind what everything represents here. If you need to pause the video, go ahead and pause it. Black is always horizontal support and resistance. So the big picture, what you can see here is that silver is really sandwiched between resistance, really anywhere above this $27.40 level, this dashed black line here. You can really see anytime that silver tries to poke its head above $27.40, it keeps getting smashed back down. So there's a lot of resistance up there. There's a lot of selling pressure up there above $27.40. And then where do we have our buying support coming in? It's down here in the 24 to 25 range. These black lines right here, you can see all the buying pressure coming in there. I would call that a moderate support level. Really, the stronger support for silver is down here in the 21.55 to 22.65 region. These black lines going all the way back from late last year. So, you take that as a sum, support, resistance. Silver is in a rectangular shaped consolidation with what? What are the other big pieces of evidence as for silver's trajectory that we can see here? Broken trend, very clear broken trend to see from the coronavirus panic lows, and also a broken trend from the recent highs. So silver was in a trendless market. We had the establishment of another attempt at a rising trend. This was just broken. Just like when the last rising trend broke, that did not mean silver needs to collapse all the way back to $10 or $15 an ounce. But we do have now a still valid declining trend. That is the primary trend that we need to see broken. So when you start to see all these broken trends and then, just a lesser downtrend, really what it's telling us here is that it's a question of timing. Our best expectation is that silver may need to back off at this now valid declining trend, but that it's a question of timing. When does silver break this most recent short-term downtrend here? If this comes sooner, we still believe that silver will not be ready to break $30 on the third major attempt, 1, 2, 3. We believe it'll be the fourth attempt when silver does that. If silver does not break this declining trend quite yet, then let's say needs to fall back to the stronger support zone here, 21.50 to 22.65, that would just mean that basically we end up with the same place here, but in a more roundabout way with more pain first. And then we expect us to end up in the same place, which is basically just to say that this rectangular consolidation here is the primary pattern that we're looking at between black and black. And these shorter term trends are simply that, shorter term trends. So when this consolidation continues throughout the next several months of this year, we believe that it will be the fourth attempt by silver to break the $30 level, which will be successful. These rectangular consolidations throughout history tend to have a bias in the direction of the former impulsive move. The former impulsive move was higher in this case. You got a rectangular consolidation going on now, a bunch of short-term trends that are breaking, and it's a question of time as far as our best assessment of when does silver break this to the upside. Do you want to put 100% of all your net worth, your children's net worth, your unborn grandchildren's net worth, your neighbors, your cousins, your in-laws? Do you want to take everyone's 100% and invest it all based on this one thesis that this consolidation is going to resolve upward? No. Of course, we don't do that. This is the highest probability expectation based on visible evidence. We always must have prudent money management, though. However, you do not invest money that you can't afford to lose. The good thing about physical metals is that they can never go to zero. They never have gone to zero. As we saw in the very beginning of this presentation, they also don't have quite as much upside potential as the gold and silver miners. You saw that in the outperformance today in the mining sector above and beyond the metals. So there's two sides to that coin, pun intended. We cover the exact gold and silver miners as well as coverage of the US dollar. We covered silver in depth, but we have updated research on the gold market. We also cover the stock market and the CRB commodity index, all in the one premium service called Precious Metals Intelligence. Flash updates go out to your inbox on a regular basis. And as I said, remember, we have a private placement opening which is now being filled. There is still time to get into that if that's something you like to investigate. When you do these private placements, you get warrants with your purchase, which is something that you do not get when you buy shares in the open market. So you come close to doubling your upside potential if these miners move higher, and you have no further significant risk other than you have to hold the shares for 4 months. It's a 4-month holding period for the shares in the private placements, but whether you're going to do it through a private placement or open market purchases, make sure that you have good research to back up your decisions. If we can help here, I'm glad to have you with us. If you'd like to speak to me one-on-one by voice or by email, know that you can reach me on the Consultations tab. I am simply an independent voice of analysis and research when that would be useful for your situation. As I said, check your inbox if you are a premium subscriber. I want to thank those people who are supporting these free videos on YouTube. On Patreon means a very great deal to me to have you as supporters. And always know that you can send questions in on that platform, and I do my best to try to get to them in these free videos and try to answer people's questions and concerns about the precious metals. But remember the focus of this channel, especially from a technical standpoint. So bringing it back, guys, what did we see today? Federal Reserve has a bazooka to the average saver's back. They're basically saying we're going to let inflation run. It's nothing to worry about. We can bring it back down when we need to. And the gold and silver market called the Fed's bluff today, if you ask me. Very fascinating to watch. I will see you guys soon. Make sure to stay healthy and well. Thank you for tuning in.